This is Joe Rabil with Invest Like a Pro. Wanted to follow up to the spider trade I mentioned last week. There was another few opportunities if you were watching. I'm looking at a 10-minute chart on the left side of the spider. On the right side is a 2-minute. There were actually three consecutive trades over the course of really 3 to 4 days based off of a zero line reversal pattern on the 10-minute chart. And one of the things I wanted to point out is that it just a lot of times. So this is the first one right here. On the 10-minute, a lot of times you're not going to get a rally all the way up to the zero line exactly. You're not going to get this red line to come right up to that level and roll over. It's just not a perfect world. You have to kind of take it and look at the pattern and look at the price action and recognize that, yeah, I would still consider this a zero line reversal, even though it didn't get right to the line. Sometimes it'll overrun and sometimes it'll come up just shy. But I think if you're doing if you're going through the process and understanding what to look for, you'll see these trades and be able to execute them. So I'm not going to actually show you this. I had a request to go through and start from the hard right edge. So I am looking at this pattern right here as if it's in real time. So we're looking at this right now. The stock has rallied up. So we had a big gap down. I mean, this is the midst of the big market drop. Big gap down in this spider. It had a little follow through. Some divergence developed here. You rallied up. And then you failed. You did a zero line reversal. This was a 1, 2, 3 change in trend on a 2-minute. Even on a 10-minute, you can actually see the 1, 2, 3 change in trend as well. Big down move. Now you're getting another rally up. And I recognize that this low versus this low, I mean, this is a pretty big momentum divergence here, looking at it from that standpoint. But when the moves are so violent to the downside, like we're seeing, I don't know that, that type of divergence is really going to play a big role. So it's not something I really pay that close attention to when it's counter trend, when it's this powerful. So anyway, we're looking at a rally here. It's moved up. The trend line is still holding right now. But if I look at what's happening on the 2-minute chart on the right, I see higher highs and higher lows are developing. I've got the same trend line in place. And now I've made a higher high right here. And the momentum is not confirming this move. So as I've said in several videos, it doesn't mean that it's an automatic short when you get momentum divergence. It's sort of just like it's giving you a little bit of an early warning sign that we're maybe starting to lose some momentum. So I'm just going to start scrolling through this one bar at a time. And you can see we got a little bit more follow through. But the MACD line has not made any more progress. And so we just keep watching. And now we get a trend line break. Let me just bring the 10-minute up to date. So we've got a 10-minute showing a break of the trend line. We've also got the 2-minute doing the same thing. I don't short or put on trades based on trend line breaks most of the time. Most of the time, they're not as timely. You can do it in certain instances. Certainly in a very quiet environment where it's been going sideways for a very long period and then it breaks out from there. A lot of times the trend lines can be very, very important. But, right now I would just say, I'm going to be more focused on a 1, 2, 3 type of pattern. So what happens is this follows through to the downside and then we get a little bit of a rally. Now, I know what's happening here. I'm at the zero line on the 10-minute right here. We've rallied up and the red line is in the zone. So I'm in the area where I would be very concerned about a potential reversal taking place on the 10-minute chart. Now, if I go to the 2-minute, I have now broken the trend line and I've rallied up to test this area. So if I got any kind of ensuing weakness from here, I would want to short this. And that's basically what we did. When we saw any kind of weakness in this spot, I would put a short on and I'll show what happens from here. But once this big bar showed up, in the midst of this big bar, we did we actually did puts again. But let's just say that you shorted the spider as a stock. And just did it as a regular stock trade. If I put this trade on here, and let's say I'm in at 317 or something like that, I'm going to be putting in a stop above this peak here. And I'm really going to be watching like a hawk this low right here at 316, because I know the change in trend actually, the high probability, or the probabilities that the trend is changing to the downside, will increase dramatically if I take out this low. So I'm going to be watching very closely, because this is actually somewhat of an aggressive trade if you think about it. The 10-minute has rallied up and broken the trend line. I know I'm in the area of the 10-minute, the zero line reversal potentially, but I don't have a confirmed change in trend yet on the 2-minute. So it bounces around a little bit in here, and it finally gets through. Now at this point, if I'm looking at this and I've put a trade on at 317, let's just say that I think we actually got a little bit better entry, but let's say we're in at 317 and my stop is at 318. And I'm just using round numbers, but you have risked $1. I'm now up about $1. I'm going to go to a break even here. I could potentially trim this back a little bit. This is if I'm in the stock. In the options, we play for much bigger plays. We don't necessarily trade it this way, but for a short-term intraday type of a pattern, I'm probably going to be doing a little trimming here. Maybe take a quarter off or something like that. If I've done 500 shares, you might take 100 off or something like that, just to book a little bit of a gain and make sure that I'm not going to lose any money if it turns on a dime and turns right back up. What actually happens here is it starts to move aggressively down. Now, there's a few spots that I think you want to be on the lookout for. This is a low area that I'd be on the lookout for, and a gap fill area. So these two spots, especially if they coincide with, let's say, like 2-to-1 or 3-to-1, I'm kind of looking for, the money management area, which would be 2-to-1 would be around 315. Well, I don't need to get it down to 314.75. I don't have to be perfect. If I get it down to 315, that's good enough for me. And I'd probably be looking to take a little bit more off there. Everybody's going to have their own strategy. I'm more inclined to just kind of piece it out and sell it along the way, as opposed to take big chunks or sell it all at one spot. But I'm going to be on the lookout for these specific area as it's moving. Let me bring the 10-minute up to date, because this rallied up and then it dropped down. So I now know I've come into this zone. I'm probably going to take a little bit more off, but it just keeps dropping. And now we fill this gap. So there was a gap fill from a few days ago. I definitely want to be looking to do a little bit more trimming if I haven't already. And we get a decent rally ensues off of this. So at this point, you have different methods for how you want to handle this. You've made some profits. Your trailing stop could either be very, very aggressive, where you'd have been stopped out on a move back up here, or you could give it more room and realize, I bought this or shorted this at 317. Even if I, put it in a stop at 316 and give it some room, I'm still locking in some money. So it really kind of depends on whether you want to stay with the trend, and whether you would like to just get in and get out. When I see the 10-minute kind of confirm and roll over and get the MACD line to cross down through, a lot of times I will just switch and say, I'm going to, with whatever's left, let's say I have a third of the position left, I'm going to use the 18 on the 10-minute now and see if I can't play for a much bigger win. So I know I've booked some profits. I've made money on this trade. The worst thing I'm going to do is make a little bit of money. The question is, can I turn it into a bigger winner? And it's got to be in the right conditions. I mean, we're in very extreme volatility conditions where I think you can play for, really big wins and stuff like that. So you got to realize what you're dealing with. When the volatility is lower, I mean, you get a move that's a point and a half off of a point of risk. That's a great trade. You just want to take the whole thing. But in an environment like this, where there's a lot more volatility, I think you want to try and get bigger wins out of it. So as we continue on here, it dropped down again. It's getting a little bit, this is turning into a longer trade. I mean, if I put this trade on, just before lunch and it's 2:00, I mean, I've been in this a couple of hours now, I'm probably going to get be looking for a spot to maybe just take out the rest. I noticed that this drop here doesn't have the same, you didn't make a new low on a momentum basis. And while I don't see that as being, I mentioned this here, it's not like I'm sitting there hyperactively looking at this, but in this instance, because you've had such a big drop and you've made a lot of money, I think this might be a good spot to actually take some profits. So somewhere in this zone where you've had a big win. So anyway, I just wanted to point out, this was just one example. There was one more trade on the 10-minute that showed up. There were three of them back to back. The entry on this one, I'm just going to show very, very quickly. As this rallied up on the 2-minute, so there were two different types of entries here. If you played it more aggressively, you could have made a more aggressive trend line move and done the 1, 2, 3 change in trend, which was also a 40 to 18 bounce right here. You could have gotten short at that point. We actually didn't play that because we thought the rally was pretty strong the way it was developed. We actually thought it was more climatic, but it really wasn't at this point. And we waited for this signal, which is a more confirming signal. You're breaking the main trend line and then it moved. But again, you had a really nice move to the downside when it was all said and done. So again, I didn't want to get in too much detail on every one of these trades. I wanted to give one example starting from the hard right edge and show kind of what I'm looking at, how I would be taking profits if I were doing the stock. So make sure you subscribe, hit the like button, and we'll see you soon.